Welcome back, traders, to another weekly outlook. Today we will be going over the dollar index and the S&P 500 and talk about what we can anticipate during the next week. Like and subscribe if you don't want to miss out on any future video. And I would say now let's get into the analysis. Right now you're looking at the monthly chart of the dollar index, and you can see we rallied away from a bullish fair value gap and are now pushing higher into this open bearish fair value gap. And so we anticipate a run higher on the dollar index maybe during the next month or the next week into the open unbalanced fair value gap right here. We moved on onto the weekly time frame, and as you can see, 3 weeks ago we rallied away from a bullish fair value gap coupled with the balanced price range right here, which is not annotated, but it's this inversion fair value gap. And you can see we rallied away and traded higher. We have relative equal highs right here, which you will see better on the daily chart in a second. Here you have the level from the monthly time frame, the bearish fair value gap, the open of the fair value gap. And as you can see, we don't have much levels on the weekly time frame which we can refer to, but we have this bearish or bullish order block which consists of these three bearish down close candles. So we could see a drop below previous week's low into the weekly order block and then trade higher, taking out maybe the buy side liquidity pool if it's realistic during the next week with the NFP news release on Friday. I don't know, but this is our only key level on the monthly time frame for right now. So the daily chart, a little bit more lines, a little bit more information, and as you can see, the buy side liquidity pool, which I mentioned, the relative equal highs, and above that we have a new day opening gap, the volume imbalance right here, extended with the blue box, and right above this volume imbalance we have also a bearish unbalanced fair value gap right here, which we would like to see get filled in the future. But as you can see, price got held inside a range last week, and we're building up sentiment probably for the upcoming week, the NFP week. We're inducing buy stops and sell stops below and above the marketplace, and building up sentiment for the next week. So what can we anticipate? I really don't know, but as of our higher time frames, we want to see a expansion to the upside, taking out this buy side liquidity pool, but market can also drop lower, taking out this low. Quickly, a quick recap on the last week. Last week on Wednesday, we dropped into a bullish fair value gap coupled with a bullish order block, which we outlined last week, and also here the new day opening gap right here. So as you can see, order flow has been bullish, and also we're bullish on the higher time frames like as the monthly and weekly chart as we just discussed, and we want to see a rally higher above this buy side liquidity pool, above the range, and also these relative equal highs. So now let's take a look at the S&P 500 E-mini futures. We're starting off with the monthly time frame, and as you can see, just quickly going over the monthly time frame, we rallied away from the bullish fair value gap coupled with the monthly order block, and as you can see, we took out the relative equal highs right here last month, and now we opened with a new monthly candle, and the last days of the last week were pretty bullish, so we have the small little bullish candle on the current monthly candle. And we still want to see a run above the buy side liquidity, even though on dollar we're bullish, so indices should be bearish, which is a little bit conflicting in our analysis. That's why we need to adapt during the next week and see what kind of information we can pull out of the market and see how we can adapt. Now let's jump to the weekly time frame. On the weekly time frame, as on the weekly time frame of the dollar index, we have not much levels to reference where price can rally away from next week. But as you can see, last week we rallied away from the inversion fair value gap right here, or the balanced price range, and coupled with the consequent encroachment of the wick from this down close candle, which is also a bullish order block. Last week we saw a nice reaction away from it, and that's why I really don't know if price wants to trade above the buy side liquidity and DXY will drop lower, or if it fails to trade higher and we collapse lower again to take out this sell side liquidity pool. But on a yes, as of right now, I favor a run higher above the buy side liquidity, even though our analysis is bullish on DXY. But as I said already, we need to adapt and gain more information from maybe Monday's price action, so we can build up on that and frame a solid idea on what we want to see. So if we're bullish on the S&P 500, this is what I would want to see. Monday should trade above this red line and close above it, which is a bearish fair value gap, and this should become a balanced price range. So, and if Monday is bullish, and it's very likely that after Monday's close, we will have a bullish fair value gap right here, somewhere inside this range. And then Tuesday and Wednesday should drop into this fair value gap and we should rally away. This is my bullish idea, and our targets are, of course, first of all, these bearish fair value gaps right here and here, and also the new week opening gap right here. Price could fall lower from that. As I said, Monday, Tuesday could rally hard, trade into these bearish levels, and then collapse lower again, taking out these relative equal lows. So these are the two scenarios. I would definitely wait for Monday's price action, and then on Tuesday you will have a more solid idea on what you want to see. So looking at the economic calendar, we have a pretty volatile week ahead of us. On Tuesday, we have 10 a.m. news releases, the Fed Chair Powell speech, and on Monday we have no news releases coming out. As I said, it's probably better to wait for Monday's price action to unfold, and then on Tuesday you will have a much better picture on the market and maybe have very solid buys on which you can build up during this week. On Wednesday at 10 a.m. we have the same Fed Chair Powell testifies news release as on Tuesday, and after that we have at 1 p.m. we have a 10-year bond auction. I'm not interested in that. I will look for a setup after 10 a.m. On Thursday we have unemployment claims at 8:30. There I will just normally look for a setup at 9:30 a.m. at the New York Stock Exchange Open. On Friday, we have unemployment rate, NFP. So I would definitely, if you're a new developing trader, I would definitely recommend you to not trade this news event because it's very volatile and it hurts you more than you can benefit from it. So definitely stay out on Friday. For the more advanced traders, I will look for a setup at 9:30 at the New York Stock Exchange Open and see if I can catch the second wave of the move. Based on my analysis on the S&P 500, which is bullish for now, I would want to see the Wednesday low of the week weekly range profile. So how to anticipate this weekly range profile? You need to know the hard time frame discount arrays, and when the market fails to drop into that array, odds are Wednesday will likely see the drive lower. Wednesday, London or New York session. Monday and Tuesday can be down days as well and form this profile. So wait for Monday and maybe Tuesday, and then Wednesday should drop into the bullish fair value gap, which we anticipate being formed on the daily chart. Because I'm so indecisive and we have a conflicting analysis between the DXY and the S&P 500, I will also wait for the new week opening gap. I will want to see where we open for the week, which will give me also more information. And if you want to stay up to date on a regular basis, I will update you in my Telegram channel, which is linked in the description below this video. And I would say if you enjoyed the video, leave me a thumbs up, and we will see us in the next one. Stay safe, trade safe, bye.